All right, good day, you all. This is the PM, and welcome back to yet another first class today. Talking about market structure today. We'll be talking about market structure today. Basic market structure. You understand? Talking about the basic market structure. Yeah, we would be looking at the basic market structure before moving to the advanced market structure. Do you understand? Um, One thing that will actually help you a lot in this trading, it's actually the way you view the market. That is your perspective. The understand of the market. So how you view this market is going to actually tell your longevity this market, how long you're able to stay in the market. So I would want us to review the market in the perspective of, let me say, of war. Yeah, let me say war, which is war between buyers and sellers. They understand because we basically understand. Excuse me. Yeah, because we all understand that we as trader we have just two basic things to do in the market. Is to either buy or we are selling. Do you understand? So it's either you take the buy side or you are taking the sell side. It's either you are protecting the buy side or you are attacking the sell side. Do you understand? So and then we have three types of trends. Yeah, not trends. So we have three types of market structure. We have the uptrend. This is the bullish market structure, whereby you see our higher high and higher low, higher high and higher low, and so on. This is the uptrend. Then we have the bearish market structure, whereby we see market give us lower low, lower high, lower low, lower high, lower low, like that. Do you understand? And the last structure is what we know as the ranging market structure or the consolidation phase, whereby price is neither giving us an uptrend nor is it giving us a downtrend. We are not really seeing any reasonable price action. Do you understand? So this is universally known as what the ranging market. Basically speaking, this is universally known as what the ranging market. Do you understand? So yeah, this is very simple. Let me give an example before I proceed. Just like this, we can easily see that the market here we have this is basically an uptrend. Even the CEO would tell you that yes, it's an uptrend. You can see this is our low. These are higher high, higher low, higher high, higher low, higher high, and higher low, higher high, and higher low. Yeah, I want to give a you guys market trend. Yeah, so this shouldn't be an issue. This is just like a recap. You understand? This shouldn't be an issue. So this is an uptrend. Um, this phase is actually a ranging phase where we are not seeing either upward trend, downtrend, just giving us like a bouncing from a particular zone to another zone. Do you understand? So in this kind of case, it's advisable to wait for price to break out to either the upside or to the downside before we can actually say we want to start trading. Do you understand? So now let me see an example of a downtrend. Let me just invert the chart. Okay. So basically speaking, we have our downtrend here. We have a lower low here. We have a lower high. You basically understand it now. You have a lower low. You have a lower high. You have a lower low. You have a lower high, and so on. Do you understand? Lower low, lower high, like that. So I don't think that should be an issue with any one of us here. I don't think that should be an issue. Yeah. Always we need to think about like this is just the basic market trend. Then something else I want to explain. This is like a recap because I want to believe I've explained all this in the previous classes, one of our classes, yes. So there's what we call the targeted and the protected areas. They understand. You have the targeted areas and you have the protected areas in our market structure. You have the targeted and protected. You have the targeted and the protected area. Do you understand? So logically speaking, in an uptrend, sorry, or in a bullish market structure, logically speaking, we want to target the highs. Do you understand? Because we know that price will always violate every highs. Do you understand? Logically speaking. So, which simply means this place, this high here, is going to be our targeted point. Do you understand? That is our targeted area. Targeted eye. That is TH. Targeted eye is basically, I just abbreviate it as TH. Then here is our next targeted eye. Do you understand? Then this, if price does something like this, if price pulls back, where's the next place we are going to be targeting? This eye. Do you understand why? Because we are seeing an uptrend. You understand? So we're targeting this next eye. This will be our what next targeted eye. The only reason why we will not target this eye is when this whole bullish movement gets invalidated. How can we tell that this has been invalidated? When price takes out this protected area. Yeah. Do you understand? When price takes out this protected area. Do you understand? The lows of every low in an uptrend is known as our protected area. Do you understand? So yeah, it's our protected area. So once price broke above this target high and retraces and started moving up, this place has become our protected area. But the reason why we call this our protected area is because what it has carried out its primary duty. What is primary duty? Its primary duty is to attack this next high. Do you understand? Is to attack this next high. Which is some people call it transactional liquidity. So yeah, to attack this high. So once this low has been able to take out this high, then it means price should not on when the price is still bullish, price should not come and take this out. Do you understand? So this is going to be our protected area. Our protected levels or protected areas are where we want to put our SLs. Do you understand? So when we go in details, we'll talk about SL and refinement and the likes like that. But basically speaking, this is what we want to do. So sorry. So we'll be expecting price to do what? Start moving from here to give us what new high by taking out this previous high. Do you understand? So it's as basic as this. This is for our bullish setup. While we are in a bearish trend, you have our lower low here, you have our lower high. Don't forget in the downtrend, the lows, the lower low are the targeted low. These are the areas you want to attack. Do you understand? You don't want to be attacking. You don't want to be attacking this low down here. You don't want to attack them when the trend is bullish. Do you understand? We all basically know that if the price is going up, you're expecting it to come and take out this high. Do you understand? So you want to attack here. So when it comes down, we know this piece is protected. So what is the next drawn liquidity? These are our next targets here, which is also known as drawn liquidity. So we attack here, attack there. It comes down. The next place we're attacking is what is here. Do you understand? In a downtrend, reverses the case. In the downtrend, when we have something like this, this is our lower low, this is our lower high. When we have a new lower low, it simply means we've taken out this space. Since this high has taken out this low, it simply means what? this high has become what? Our protected level. Do you understand? So for our retracement, what are we going to be expecting? Price to take out this low. Price is going to take it out. That is if the price remains bearish. Do you understand? In a basic market structure. Do you understand? This is just what we call a basic market structure. So since this low has been able to take out this previous lower low, it simply means this is become what? Our protected low. Sorry, our protected high. Do you understand? These are protected high. So basically speaking, what this actually tells us, or what this connotes, is that price actually moves from levels to levels, taking out the external range liquidity to the what internal range liquidity. Price move from the internal range liquidity. When we get to liquidity, we'll talk about this. There's no need for you to stress. The price move from internal range liquidity to what? External range liquidity. This is just the basic knowledge as regards it. Do you understand? So sorry. Um so I have explained the protected and the targeted areas in both the uptrend and the downtrend. Don't forget, in an uptrend, the protected areas are always going to be the the higher low, which is these ones that are down here. These are the protected areas. While the targeted area is going to be what? The higher high. Do you understand? But in the downtrend, don't forget, we will always attack. We always attack the lower low in a downtrend. Why the lower high will always be what's protected. Don't forget that. That is basic as it should be. Do you understand? There's nothing complicated about that. It's very, very easy to understand. So that is going to be all for our basic market structure. So stay tuned for the next. We'll be talking about the advanced market structure. That's when we now start talking about taking out liquidities and doing some other basic things. Not difficult actually. So peace out for now.